To Monday Minutes. Very powerful week of Fed speak last week, leading into this morning's session. If you listen to the chairman last week saying he thinks the Fed needs to move expeditiously to neutral. If you look at the S&P, the Fed has neutral in and around 240. If you listen to the chairman, he's indicated he sees nominal neutral between 2 and 250. Atlanta Fed President Bostic saying he sees it around 2.25. You have St. Louis Fed President Bullard saying he has R squared at 0, implying a 2% neutral funds rate. If you look at the market pricing here, certainly by the end of 2022, now the market has the Fed getting somewhere between 240 and 250. And if you go beyond neutral and you look at the terminal rate now, we're pricing in somewhere in the range of 275 to 280. So the Fed has certainly not signaled that they feel they need to go above neutral, willing to do that, certainly. But in the process of getting to neutral, we're also going to have the balance sheet runoff and the balance sheet announcement more than likely at the May meeting as well. So how that evolves, how that impacts financial conditions over time remains to be seen in conjunction with the rate hikes that we're going to be getting along the way. But if you look at the price action this morning, more volatility in the marketplace. We've been advocating volatility. We certainly think the data is going to play a key role here moving forward. So we do expect more volatility across asset classes. And looking at the rate market, traded a little north of 240 this morning. 10-year yields getting in and around 255. We've been strong advocates of higher and flatter in terms of the yield curve. Now we have multiple parts of the U.S. yield curve, which have actually inverted 2s to 10s now, holding on to some positive slope. And certainly the narrative here for the Fed, depending on what metrics you want to look at in terms of what the yield curve is signaling for the economy, and different people are going to look at different metrics, but certainly the narrative here is growing for the Fed, slightly problematic in terms of where the market is pricing relative to the outcome of the economy. But one thing is clear, and we've been pretty steadfast on this, the Fed seems more than willing to let the market continue to take the lead here with its market pricing in now multiple rate hikes over the course of the next year to a year and a half. And like I said, getting to a terminal funds rate somewhere around 275 in conjunction with the balance sheet. On the ground this week, we do get Treasury supply. We'll get 2s, 5s, and 7s. And in addition to that, with regard to data, we're going to get consumer confidence, going to get another JOLTS report. We're going to get a very important inflation reading, the Fed's favorite PCE metric, and then certainly on Friday, another employment report. Wishing everyone a great week ahead. It's going to be a busy week and another volatile week. I'm Greg Faranello, head of U.S. rates for Amerivet Securities.